The Icons of Real Estate Podcast. Are you ready to learn the proven money-making secrets from top-producing icon agents? Ready to skyrocket your business? This podcast is for you. Tune in every week with your host, Tomasz Fonseca, and find out how to implement proven strategies to 10 times your business, from $3 million to $30 million in just 12 months. Brought to you by the Masters at Real Estate Marketing, Arter SEO.
Welcome to the Icons of Real Estate podcast. I'm your host, Patty Teal. Let me tell you about today's guest. You may already know of him. Dave Seymour is both a residential and commercial real estate investor who has become one of the most recognizable experts in his field. His passion for business and real estate put him on the radar of A&E television, as well as CBS, ABC, CNBC, Fox News, and CNN. His Flippin' Boston series posted the highest ratings ever for the A&E network at the time of airing. Welcome, Dave.
Welcome. Hi, Patty. How are you?
Hi,
Thanks for having me on. Every time I hear that intro, I kind of pinch myself and look over my shoulder. I'm like, who are they talking about?
Who are they talking about? Who is that guy that did all that stuff?
Who is that guy? My father back in England still doesn't know what I do. I just assure him consistently, Dad, I'm not a drug dealer. It's okay.
Well, that's funny. And some people still, even though, of course, most people do know about podcasting, but I still run into people and that say, could you explain to me what is a podcast? That occasionally happens as well. Anyway, I wanted to start with your story. I know you were a broadcaster. I know you still do a podcast that's wildly popular. So you still have broadcasting in your blood, I think. But real estate as well. And how did you get to where you are now? What was the journey? Take your time and tell us your story.
Yeah, no worries. I appreciate you asking. It's kind of unique, I would assume. I'm actually an immigrant to the United States. I came over from London back in 1986. It's just a young buck. I was like 19, 20 years old. I had met my first wife, who was an American. Her visa ran out, and it seemed like a good idea to emigrate, get married, and come to the States. But my background is very blue collar. I come from a working class mentality. Trading time for money is what we were taught and trained to do. I was a horrific student. I just scraped by with the equivalent, I guess, of a high school diploma. Not because I don't think it was a lack of smarts. I just was never really good at spending time, energy, and focus on things I didn't enjoy. In England, the school system in England, we take O levels, A levels, and what are called CSEs. O level stands for ordinary level education, A for advanced level education, and C for, can't remember what CSE stood for, but I came out of school with like 3 O levels and a couple of CSEs. My sister, who was a lot smarter than me, she came out with like, I don't know, 8 O levels, a couple of A levels, and a partridge in a pear tree. So, but it was interesting because the things that I passed the exams in were not graded throughout our education the same way you are in the States. You get one shot at it. And they were English, religious education, and art, theater major. And it was like nobody could compete with me if it was something that I wanted to do. So kind of interesting in retrospect. I'm now 55 years old, and I look back at that and I think to myself, those have been the core things and the core skill sets that I've used, throughout my career. But anyway, I came to the States, 20 years old. I lived in New York City, loved it. Lived in Wheeling by God, West Virginia for a while. My first wife's parents were in that part of the country. And Wheeling, West Virginia in the late 80s, early 90s was rough. It was Rust Belt. It was a depressed area. Anyway, I was offered an opportunity to move up to the New England area, which is where I'm stationed now. And I came to the Boston market, and I was kind of trying to figure out what I wanted to be when I grew up. Right. I have I have a function within me, and I don't know what to term it other than that's the word that came to mind, is a function. Like, I love camaraderie. I love a team spirit. I love to take care of people. Like, for me, it's like, I like service, right? I like to be able to give something. Not always hoping to get a return, but just the law of reciprocity is a beautiful thing, but sometimes it feels good to take care of each other. And I don't want this to get hokey and artsy fartsy, but it's just in my DNA. That's who I am. And
Right.
I loved law enforcement. And a buddy of mine said to me, "Don't be a cop." He said, why don't you take the fire department exam?" And I'm like, "What?" He said, "Come on, come join us at the fire department." And I took the civil service exam here in Massachusetts, aced it, was in the top 1 percentile in the city and town that I was living in. And 1997, 96, 97, I got on the Lynn Fire Department.
Wow, that's so interesting.
Yeah, and I loved it, Patty. I
Mhm.
mean, I loved being a firefighter. I'm a guy's guy. I like the
Right.
camaraderie and the BS of, a firehouse full of men, breaking each other's stones and, just that environment. And
Mhm.
it was during that time that I got to see a lot of the pain that's out there, right? This was during the financial crash, 2005, 6, 7, 8, 9, 10. I'm on the fire department, so I got to see abandoned houses. I got to see professional tenants. I got to see buildings demolished and ripped apart because they just financed everything out of the property that they could as a homeowner. They took the kitchen sink and the cash and they left. And I got to see these communities that were already challenged. I worked in a city in Lynn, Massachusetts, but these communities were really getting beaten down. And if you
Mhm.
think about it, real estate, sticks and bricks, it really is the heart of a community, right?
Mhm.
Quality neighborhoods, quality tenants, quality home ownership, pride in home ownership, and all that had gone to crap. It had gone. And I myself was I use the word victim in the sense of uneducated. I was a victim of the mortgage crisis. People around me were telling me, "Dave, refinance your house. Real estate never goes down." A buddy of mine was a mortgage broker. I refinanced my house 3 times with him
Wow.
in about an 18-month period of time. I figured out later on he was making 6 points on every mortgage that he wrote. So, maybe he wasn't
Good
my friend.
friend.
Yeah, right. Maybe he wasn't my friend after all. It's amazing what you don't know, and then once you learn something. But
Mhm.
my own property was in pre-foreclosure. I was working about 120 hours between the fire department, construction, and part-time night work. Cost me a marriage, cost me a relationship with my
Oh.
kids. It was tough. It's like
Mhm.
you make decisions. And you make them freely, or I've made them freely out of trying to do the right thing, always trying to do the right thing. And yet not everybody is built the same way.
Mhm.
So anyway, to fast forward, during that period of time, I was working construction on my days off. I was losing my own house, and I was working a particular job site. And I remember it was cold, it was wet and cold, it was raw Boston. And the property I was working on with a couple of guys from the firehouse was an investor property. Guy was flipping this house. He would bought it for X, put some money into it, sell it for Y, make a couple of bucks. Well, this guy showed up in his nice car. And you
Mhm.
got to imagine, I'm covered in crap. I'm working the construction site. My body hurts. I got to get off the construction site at 4 to be at the firehouse at 5 and work an overnighter, and then come back to the construction site the next day. I'm dragging my butt through life. And this guy got out of this car, and he had a smile on his face, and he drove a nice car, and he was wearing nice clothes, and he had a shiny attitude about him. And I'm like, "Who's that?" And one of the guys said, "Oh, that's Bob, whatever. He owns the joint. He owns the house." I said, "So what's his gig? What's he all about?" And, the guy told me he buys houses, fixes them up, and sells them. So I start talking to Bob. And I'll let you in on a little secret, Patty. Bob wasn't that smart. He wasn't. He wasn't that smart. And I'm thinking to myself, what the hell am I doing? right? What am I doing? It was a case of, God coming down, tapping me on the shoulder. I felt like a Snoopy cartoon where the light bulb went off. And, it was a case of transitioning from, for me, always trading 1 hour of my time for somebody else's money to create my own financial future. And that's really where it began. And I was in my pickup truck. Wasn't one of the happiest moments of my life because I was going through a lot of personal challenges at that time. Like I said, losing my house and a marriage, and it was a really crappy time. And I'm screaming and shouting at my God, and I'm like, "What am I supposed to do next? Show me the way." You know what I mean? Like I'm
do.
screaming, right? I'm screaming and crying and shouting and begging and pleading. And a commercial came on the radio in my truck, and it was Teach Me Foreclosure, a free 1.5 hour seminar coming to your neck of the woods. And I'm like,
A
okay,
sign.
buddy,
Yes.
a sign.
Mhm.
I believed it to be so.
Mhm.
And we got on board. My now wife, Mary Beth, who was a labor and delivery nurse that I met when I was a paramedic in training. We had got together and we went to a seminar, and we invested, I think it was like $30,000 on her credit cards for my education, bought myself some accountability that day. And the rest is history. I went for it. Once I've made a decision, something about my DNA, if you will, or my sense of life is I can't do anything with half measures. I'm either all in or I'm out. I can't maybe do a little bit of this, or I'll maybe do a little bit of that.
Right.
Maybe isn't a day of the week, is what one guy told me one time.
You have no backup lights.
No, I don't. I don't have any backup lights. I love that
Right.
phrase. That's awesome. Yeah, I don't have backup lights. And look, today, the people who invest with me appreciate the fact that I don't have backup lights, because they necessarily don't have always the confidence to go out and do the things that I do, but they've got the confidence to be my backup system, if you will, to be able to, to launch forward. But anyway, it started there. I started with a single family house. I learned wholesaling. I learned contractual real estate. I learned that not all real estate agents and realtors are created equal. There's a lot of personalities in the real estate world, and I did my very best to swim amongst them all. And very quickly, I became recognized in Massachusetts as one of the number one distressed asset investor. We very blessed to be recognized by the Attorney General's office for the work that we had done. Martha Coakley reached out to me, and she said, can we partner up? Well, she had her own program, the Abandoned Housing Initiative here in Massachusetts. This is 2008, 9, 10, when everything was pretty rough. And we partnered with them, and, we go to court, get the houses, foreclose on the bank. We foreclosed on the bank. We put a lien in front of the bank for construction, and we fix them up. And then the bank could either buy them back or we put them to market. And, again, it had gone kind of like full circle, right? You saw the depression of what had happened with the mortgage crisis and the crashing of the housing market 2008. And then for us, we saw it come down, and then we got to be a part of building it back up again. And I think real estate investors, good real estate professionals, lawyers, realtors, contractors, they're the ones that really brought it all back. I think, as much as we've tried to kick it over to the government to solve our problems, I think we know that doesn't work, right? We take our destiny in our own hands, and, it's kind of been on a trajectory from there. So I'm sorry, I didn't mean to go quite as long, but,
I love it. Our listeners will absolutely, enjoy your story. And I think everybody loves a story where somebody didn't start with a lot, but they
Right.
have done so much. I
Yeah.
think that's fabulous. So thank you for sharing that. By the way, I love your British Boston accent.
It's a mess, isn't it? Isn't it a mess?
I don't think I've ever experienced that before. It's just lovely. Anyway,
They call me the Boston Brit.
oh, that's cute. That's very cute.
Yeah.
So, first of all, what are the types of properties you invest in, or that you have your clients invest in?
Yeah, today. So we went through the transition of single family flipping. And along the way, I'd always retain my own portfolio of multifamily assets locally. In the Boston market, we've got a lot of 3 families and 4 families, 6 family units, or sixplexes, they call them in Chicago, for example. So I'd always invested in that. And as my career has progressed, my partnerships, if you will, my investor partners, sometimes they would come in as a mortgage, right? A private mortgage if I was doing a flip. So that's a structure that I've used over the years. Sometimes they come in as just a funding of the construction. So they wouldn't have a mortgage, but they'd have a note in a secondary position against the bank, giving us liquidity. Some people would just give me money and I'd say, okay, I'll put the money to work, and we'd negotiate a rate of return, almost like a revolving line of credit. But they knew Dave was going to go out and buy the right deal, execute on the right deals. I was very successful in buying a portfolio of rental properties in Maine with another partner. And what we did there was we brought in some private lenders, investors. We'd use my own credit worthiness and my tax returns. We'd buy the assets cash and then immediately refinance them out within that 30, 60-day period of time, so that we could take that capital right out of the deal and then roll it into the next deal. That was a strategy that worked really well for us. We actually liquidated the last of those assets about a month ago with over it was an infinite return to us because we get our own money out of there ASAP, use the capital, the bank's money, which is always the cheapest, and use investor capital and keep turning that over. But our investors were anywhere between an 8 to 12% interest on their money, interest only. So they were always very happy. Sometimes they participate in the upside if it was a sales acquisition, and we give them a piece of the profit on the back end. So, some of those return profiles for investors have been very aggressive. Again, these are all targeted returns. I'm not an accountant, I'm not an attorney, I'm not getting anybody an offering. We got to do the legal thing. But I've seen investors 25 to 50% return on their capital.
Wow, that's great.
Their internal rates of return can be north of 50%. So that ability to understand how to raise money, how to, it's interesting. In my career, I have never asked for money.
Really?
I don't ask
in this
for money.
line of business. That's pretty amazing. Yeah.
Yeah, I don't ask for money. What I do is I share opportunities, right? And I think that's one of the reasons that we've been successful, because I know that there is more money, especially now after the COVID crisis that we went through, that there is more money in the market than there are good deals. So who really has the leverage or the value in the relationship? It's us as investors. It's the investor partners in the real estate world. It's the realtor who knows what a good deal looks like and can bring it to a guy like me so I can take down that deal in a shorter period of time. So, we've got the golden goose, and that's a mindset shift, I believe, that not all investors accomplish. I think some investors reach a ceiling, if you will. They reach a plateau that they can't break through. They don't have confidence to start adding some zeros to their deals. So today, we're now a private equity development and multifamily investment company. When we start dealing with larger projects, the biggest project to date is about a exit number on it will be about 42 million.
A pretty big number.
Yeah, that's a nice number. It's 106 units in Cape Coral. That's a ground up construction deal. We just finished raising on that deal. We brought in about 6.5 million in private equity on that deal. Now we're finishing up the debt structure with the bank. And my investors look at those kinds of deals and they go through our underwriting and our pro formas. It's not for everybody. This isn't the guy who's got a couple of grand sitting in an account somewhere and wants to see what I can do with it. Majority of our investors are anywhere between 50 and 1.5 million. Was one of our investors that's coming in on a transaction with us this week. So, where do we put that capital? So There's a couple of examples I can give you. I'll give you a high-end example. I'll give you a lower-end example.
Okay.
We had the opportunity about 10 months ago to purchase a 13-unit acquisition in West Palm Beach. It was in a B minus, C plus neighborhood.
Mhm.
So, it wasn't the creme de la creme, but it was very much a workforce housing neighborhood. The property had been rehabbed 100%, but it was 100% unoccupied. So in my line of work, the value is in the cash flow, right? It's not necessarily in just the building. So it was a unique deal, but we took that deal down. We raised $2 million in private equity, and we purchased the property cash. So we buy a $2 million building for cash. The way we structured it for our investors was we said to them, we'll pay you quarterly distributions at time of stabilization. Those quarterly distributions have obviously progressed because we leased up in increments, only 13 doors, but we were leased up in like 90 days. We did a little more work ourselves, but big picture on that was a short hold for our investors.
Mhm.
So the idea was a 1-year hold. So 10 months ago, we purchased it, a 1-year hold, refinance, give back all of the capital to our investors, let them sit in cash flow, basically free money now because they've already got their principal back for 1 more year, and then sell into the market at the 2-year mark. And for us, we targeted out our investors to get what's called a 1.5 equity multiple on that. So if an investor put in 100,000 at the end of the deal, at the 2-year time of sale, and the investor had an expectation of getting all of their capital back, the 100,000 plus 50,000. Okay, that's a 1.5 equity multiple. But what's interesting is the market has showed us that we never really know what
It's
to expect.
changing, yes.
Right? We use our very best intelligence and experience and skills, et cetera, et cetera. So we started looking at the market, and at 9 months, we bought the asset to market. We bought it, like I said, for $2 million. It's currently in contract for $3.2 million. Our investors are looking at a potential 1.6 equity multiple in less than a year. So that's, you put up 100 grand and you make 60 grand in less than 1 year. And all you had to do was look at your quarterly reports, stay in touch with our communication. Our investors will be extremely happy when that gets to the closing table. So that's a smaller deal. Now, if we look at Cape Vista, which is a 106-unit ground-up development, that deal is $27 million, including soft costs, to complete the build. 5 buildings, 106 units, 2-bed, 2-bath, $1,850 in rent per unit. That deal, our investors have looked at that and they've said, okay, how can we structure a return on this? Because we're going to build it, we're going to bring in the contractors, we're going to run the project, we're going to do the whole development piece. So our investors are basically looking at what's called a 2x stop out. So they'll double their money, 2x, 100 in, 100 back plus 100. So that's the 2x. And then on top of that, what they'll do is they'll share in a 50-50, what's called a promote, which is everything over that is then shared with the GP, the general partners, or the operators, us. So our investors on that one are looking at potentially a 3x return on their money, a three multiple return on their money. So I've showed you a 1.5 in less than a year and a 3x multiple, but that will take 5 years. And you also have to understand 2 years, there's no cash flow because we're building the building. So it's right. Investors think differently, Patty. Some investors go, oh my God, I got to get cash flow. Some investors go, no, that money's, sitting in my 401k getting brutalized by the market. That money's, going in the pocket of my stockbroker. If money isn't working, if money isn't moving, if it's not in an investment that's aggressive right now, then money's getting lost. So some investors will look at that and they'll say, I'll take a 5-year run with you, looking for a higher return on my capital over that period of time. So that gives you some idea, some flavor.
Yeah,
I
and you
got a
must have
ton of work.
some
Yeah.
very happy investors. And once they're happy, I'm sure they're just waiting for you to come to them with the next opportunity.
Yeah, yeah,
Hmm.
it becomes cyclical. Like we have, I think, maybe 13, 14, maybe 20 max investors on that $2 million deal. Um, I would say 50, 60% of those investors are already like, I don't want my money back.
Let it ride. Hmm?
Where's it going to go next? Right.
Right.
That gets some momentum behind it. You know, one of my mentors used to talk to me about the velocity of capital, and he explained to me the rule of 72, which was compound interest. And the rule of 72 says that, you know, the higher your interest can keep working the capital, it really does bring in a massive rate of return over time. The challenge is always having that money in velocity and moving.
Sure.
And you know, I don't know about anybody who listens to this podcast or anything else, but I grew up in an environment that said you had to save money, right? You always
Mhm.
save money. You need it for a
Right.
rainy day. You
Hmm.
know, they never told me what that rainy day was. They never told me what the dollar amount was going to be. You know, I've had rainy day emergencies that cost $50, and I've had rainy day emergencies that have cost $500,000. You know
Right.
what I mean?
Well, yeah,
So
but there's
you
so
know,
many
it's
different kinds of people, and,
yeah,
and maybe the big investors probably are not so conservative.
yeah,
But reminds me of people who maybe work as a postal worker for their whole life.
yeah,
There's nothing wrong
yeah,
with that, but they get their
yeah,
retirement and they're happy, and that's it.
yeah,
Whereas other
yeah.
people just have this vision to do something more with their money.
Yeah,
So,
it's difficult to overcome. And I say this from experience, right? Like
hmm.
I needed to change for me, I needed to change my thinking,
Hmm.
my outlook around capital. Um, it's hard to really double down on the theory, and I'm going to oversimplify it because I never forgot it. A guy said to me, you got to let one free so it can come back with two or three. That's what he said to me. And it became a
Hmm.
mantra for me, right?
Hmm.
Let it free so it can come back with two or three. And when that happens successfully, from an investor, it almost feels like cheating. You know what I mean? Like I didn't do anything, but I let it go and it
Uh-huh.
came back. And
Wow.
the hardest part is finding operators that really take their fiduciary responsibility seriously. And the way that I think of that, I'll give you an example, if I may. I was sitting with one of our investors, gentleman who owns a business locally, and he was looking through one of our offerings, and he's a pretty substantial check writer. He's nearly
Hmm.
a $500,000 when he writes a check. And Jack looked at me and he said to me, he said, you know what, David, I'm super busy in my business. Right. He knows his business inside out, back to front, 30 plus years of doing what he does to create income in his business. He said, I understand 75, 80% of your business. I'm not a stupid man, he said, but I don't have the years of experience that you have. I don't have the years of analysis, of market analysis, deal analysis that you have. And he looked me in the eyes and he said to me, this is my retirement capital. That means this is the money that me and my wife plan to retire on.
Hmm.
I'm giving it to you. He said, I'm giving it to you. He said, I'm giving it to you because I trust you.
Hmm.
So I can't sleep at night.
Oh.
Right?
Uh-huh.
If it's like, if I'm not 1000%,
Hmm.
1000% down on the deal. And
Hmm.
you know, that's our fiduciary responsibility. We have to follow the Security and Exchange Commission rules and regulations for investing.
Hmm. Hmm.
Um, no matter what the asset class is that we're investing in, be it an
Hmm.
apartment complex or build for rent, single family complexes that we're building. You know, it's the same rules and regulations, whether it's 50,000, 25,000, or, you know, 1.5 million from a family office. So, you know, our pool of investors is diverse. Our offerings are diverse, but the fundamentals are exactly the same. good economics, right? Really
Yeah,
strong
yeah.
economics, job growth, population growth, cost of living, et cetera, all being in line, and then being able to find the right deals to execute on. So,
Well, I like that you work with investors who can invest different amounts and some where it's their retirement fund. This is
yeah,
really, really important. And others who
yeah,
are professional investors and if they lose it, they lose it, but
yeah,
they have
yeah,
more in
yeah,
the more in
yeah,
their pockets if they need
yeah,
it.
yeah,
So you
yeah,
take on all people that
yeah.
that want to invest and secure their future.
Yeah, yeah. We work with, I work with a retired cop. I work with a plastic surgeon.
Hmm.
I work with a VP, vice president. This was great. I love this guy. Vice president of a nationally known title company. Right. This
Wow.
guy is probably bringing down salary 800 a year with bonuses 1.5 1.6 million a year, but
Hmm.
he's an employee, right?
Sure.
So
Yeah.
the tax man's gonna be nibbling
Hmm.
away.
Yeah.
But I had a conversation with him, and it was his first investment, and it was around 100,000, and he said to me, Dave, what's the worst case scenario? I said, I got to tell you, worst case scenario is you can lose every single dime that you invest with me.
Hmm.
I said, SEC compliance says that I need to tell you that. And I'm telling you that. That's reality. You could lose every penny.
Hmm.
Now, what you might want to ask me is, Dave, if you were investing in it, what do you think the very worst case scenario or best case scenario is for you? I said, well, I am investing in it. I invest in all of my deals. And look, worst case scenario I feel on a deal is I break even. I don't lose anything. My number one job is to not lose principal. I said, in best case scenario is we reached the 3x or 2x multiple, whatever the deal was. And it was interesting, Patty, because he says to me, well, if all I'm going to do is break even, why wouldn't I just leave it in the bank? And it was so hard for me not to just like go down the phone and smack him a little bit. I said, are you all right? I said, what's the inflationary rate right now? What did you pay for gas last week?
Hmm.
Ask, if you do the grocery shopping, what's the difference in your grocery bill? If your bride or your partner does it, what's the difference in the grocery bill? I said, every single day, money sits in a bank. It is devalued. Every second it sits, it's devalued.
Hmm.
And you could almost hear that epiphany, like ping, like the sky opened up and a bolt of light came down, and he was like,
That's
holy
interesting.
moly. He's like, I get it. I said, money, capital is a tool. It hates resistance. It hates friction. How do I know it hates it? Because when it stands still, it loses value. Statistically, I think the buying power of $1 is somewhere around 15 or 20 cents.
Wow.
It's like
That's
we
it.
think, right? We think we
Hmm.
got 100 grand when you really only got $20,000 worth of buying power.
That's
So,
really interesting. Hmm.
alternative investments, commercial investing for a passive investor. Look, Blackstone just allocated 25 billion to their fund for multifamily and build for rent investing in the next couple of years. Like I don't need to be the smartest guy in the room. I can watch the big boys. I can see
Hmm.
the moves that they make with,
Hmm.
the Chicago teachers retirement account, the New York Fire Department retirement account, these billions and billions of dollars. And know that I'm making the right moves for my smaller investors.
Hmm.
It gives me confidence. And I think at the end of the day, that's the missing piece with a lot of stuff. It's confidence. If you think about it, the 401k investor, do they really know what the hell they're doing? Right? You went to the conference room one day because somebody was going to do a presentation. There were free donuts and coffee. You got an hour out of work. You went to this presentation. They asked you 3 questions: how old you are. Okay, you're in the low risk, medium risk, high risk, right? You're nearly dead. You need to go in the low risk right now. We're going to take X amount of money out of your paycheck. Then there's a company match, and everybody goes, "Oh, that's free money." And then they watch their 401ks do what? What have they done? Have they consistently offered double-digit returns year over year? I think the answer to that is probably no. And yet
Mhm.
nobody asked the question why. Nobody asked a question about the fee structure inside everything that we're used to doing for retirement. Nobody asked about the fee structure for fund managers. You know, for me, it gets a little personal because I've been on both sides of the equation, right?
Absolutely.
I've been an
Yeah.
employee, and
Yeah.
you know, today we offer opportunities that have really only been allocated for the 1%, right? The institutional quality investments. You know, we're blessed today as operators to be able to bring those to a wider audience. To your point, I love what
Mhm.
I do, Patty. I really do.
Oh,
I love
I
what I
can
do.
tell. That
Yeah,
is so
yeah,
cool.
yeah,
So, are you constantly looking for investment and
yeah.
all the time, just kind of
All the time.
watching what's going on? That's
I've got $300 million worth of investments in my pipeline right now.
oh my gosh.
If I turn the camera around and put it on my whiteboard,
Mm-hmm.
I'd go through those with you. Yeah, yeah,
Wow, you
always.
have found the right calling for sure. And what
Thank
about
you.
what about investors? Do you have to reach out to them? And I know you have to figure out who would be right for different investments, but do you
Yeah.
already have your pipeline full, or are you always looking for new
No,
ones?
we're always raising money. It's interesting. In real estate, there's two things that you should be doing consistently: looking for deals and raising capital.
Mm-hmm.
You know, when the deal flow is too strong, there's a way to bifurcate deal flow and work with other people and partner.
Mm-hmm.
When the cash flow is too strong, we can do it again, bifurcate and work with right partners to bring capital to what's called a co-GP environment. So we're always raising money, always raising money. But you know, I'm gonna preface it with this: it's not for everybody. Our
Mm-hmm.
avatar is what's called an accredited investor.
Okay.
Uh, an accredited investor is determined by the Security and Exchange Commission as an individual that earns $200,000 a year, or $300,000 as a family unit, or $1 million in net worth,
Mm-hmm.
not including their primary residence.
Mm-hmm.
What's interesting is the SEC says if that's your earning potential, then you're smart enough to look at alternative investments. And
You
I
got
just
this
explained, right?
star, yeah.
You get it's like getting your little blip on TikTok or whatever the hell that stuff is,
Yeah,
right?
exactly.
But I just explained to you a guy who earns 1.5 million didn't understand that his capital was depreciating every day it sat in a bank. So it's
Mm-hmm.
very frustrating when I have a highly motivated individual
Mm-hmm.
who is just below the line of accreditation. So what we've been able to do there is we can bring in non-accredited investors below that threshold of income, and for them we have a fixed income expansion fund.
Oh,
Those people can come in, put capital in for a couple of years at a 10% monthly rate of return. So they're guaranteed to make 10% on their principal every year. And then that capital we use to put deposits on deals to,
yeah.
keep
And without too much time, they probably could qualify as an accredited investor. They could work their
That's
way up.
exactly the plan. That's
Yeah.
exactly the plan. Yeah.
Mm-hmm.
Now they're a part of the company. They're part of Freedom Venture.
Mm-hmm.
They get the inside track on what we're doing.
Mm-hmm.
Monthly updates, some education is always critical. So yes, we're always looking for investors. I will not take somebody's last dollar just
Okay.
because I can. It's not going to happen.
Mm-hmm.
I've
And
turned
how do you always find them? How do you look for them?
Yeah, look, I'm blessed. The TV show gave
Yeah.
me a national, presence, if you will.
Mm-hmm. Mm-hmm.
We've been able to market that very well. I've also spent probably 10 years in that seminar world that I went to as a student. I became an
Mm-hmm.
educator, and
Yeah.
very blessed to have taught all over the country and built up a really good database of active investors. LinkedIn is actually a phenomenal resource to share your message,
Mm-hmm.
somewhat free marketing.
Mm-hmm.
But word of mouth, I mean, when I had an investor come through, they're in with us for about almost 2 million now across a couple of deals. And we always want to know where they came from, how they got to
Mm-hmm.
be with us. And this particular guy is a friend of a brother-in-law who heard a podcast or went to a webinar, loved what we did. He didn't invest, but he said, you should go check out Dave Seymour and those guys at Freedom Venture Investments. They got some great offerings and opportunities down in the Florida market. And everybody knows that Florida is just crushing it right now.
Exploding. That's for
Yeah.
sure. Yeah. The
And,
rents have really gone up.
yeah. So,
Mhm.
how do you quantify or figure out exactly where they all came from? Marketing is not my best use of my time. I'm
Mhm.
probably the spokesman for the company more than anything
Mhm.
else. You know what I mean?
Yeah.
But
I think you're
I'm in it.
very
I'm
good
the
at that.
CEO.
Mhm.
Yeah, I try.
Mhm.
So yes, we're always looking for deals. Yes, we're always looking for capital, but it's got to be a nice fit. And if it's a nice fit, then magic happens.
Yeah. So maybe most of our audience knows the answer to this. And I just wondered, when your company only works with accredited investors, is that because you are a public company? And
No,
that's,
it's SEC rules and regulations. So
okay.
I offer what's called a 506C
Mm-hmm.
Reg D offering. Okay,
Okay.
that's how I can publicly talk about my deals. Our
I see.
conversation
Mm-hmm.
that we've had about targeted returns and specific deals, the smaller one and the big one, I would be breaking the law if I wasn't a 506C Reg D
I see.
qualified
Okay.
company, right?
Mm-hmm. Right.
So that's why the accreditation
Comes to
needs to be
play.
a part of it. And
Mm-hmm.
it's a simple process. It's a question and answer that they fill out in the back office, and then a verification service that we use. But once that's verified, and somebody has invested, it's a lot easier to invest the second and third time.
Mm-hmm.
So that's why we deal with the accreditation.
My gosh, Dave, I could talk to you all day. I have lists of questions that we didn't get to,
No, I
but
get it.
I mean, I loved all of the information you
Mm,
shared. You just
mm,
know it backward and forward. You don't have to look
mm.
at any notes. You know what you're
No,
doing,
no,
and
no.
what a great success you've made with your life and helping people and not taking their last dime, and
Yeah.
having some integrity with it.
Yeah, you
That's
have to.
amazing. Yeah.
Appreciate it. Thank you for the
Yeah.
comment. Yeah, yeah.
Oh, and would you share your contact
Yeah,
information?
sure.
And you do
Yeah.
a podcast too, don't you? With
I do. I do.
yeah.
If you look for Freedom Venture on any of the podcast sites, you'll find it there. If you want to, I'm old school, Patty. I've actually got a telephone number, and you can
A
call us
telephone
direct.
number?
Yeah, imagine
Cool.
that. Imagine that. Yeah, it's not rotary though, so
Oh,
that's
but somebody
we are.
actually answers it?
Yes, they do.
Oh, that's great.
781-244 781-422. What is that phone number? Hold on a minute. I do have to
Okay.
get some notes because I never call my own office.
Oh, I think I've got it.
Oh, there it is. My Lord. 781-922-4418. 781-922-4418.
Oh, that's great.
If this podcast is also streamed, you can see behind me freedomventure.com.
Mm-hmm.
Google my name, Dave Seymour, Seymor. I'm no longer on America's Most Wanted, so it's okay to Google me now. We're good to go.
Good to
But
know.
yeah, reach out. Let's have a conversation. We're proud of our customer service. If it's a fit, great. If it's not, great. Maybe it'll be the next time. But the more educated an investor is, the better investor they are to do business with. Right? It's a team. It's a
Yeah.
team. So yeah, you can find me if you want to find me.
I will find you. And I've heard you're building an office in Fort Myers, and that's right
We
where I am.
are
So I can
right
really
on
track you
McGregor.
down.
Yeah, right on McGregor Boulevard. That's a crazy deal too. I mean, that project, we purchased the land for $700,000. It's got a 22,000 traffic count, and we were offered $1 million for it 2 days after we purchased it for 700.
Oh my gosh.
We put our permitting in, and we haven't even broke ground on it yet, and we're 100% pre-leased. So it's the market, right place, right time. So
Boy, that's for sure.
come on down, Fort Myers. We'll be there.
Oh, thank you so much. And thank you for being on Icons of Real Estate podcast. You were amazing.
Thank you. Thanks for having me, Pat.
Take care.
Bye-bye.
Bye.